Future Science Holdings has joined the ranks of top-tier global companies by being a part of the U.S. capital markets. To understand the power of capital markets, one needs to understand what is the stock exchange and how does it work. The stock exchange is nothing more than a giant global network of an organized marketplace where every day huge sums of money are moved back and forth. In total, over $5 trillion a day are traded, more than the value of all goods and services of the entire world economy. However, it's not rice or cars that are traded on this marketplace, but predominantly securities. Securities are rights to assets, mostly in the form of shares. A share is like part ownership of a company. But why are shares traded at all? Well, first and foremost, the value of a share relates to the company behind it. If we think of the value of the company in terms of a pie, the bigger the overall size of the pie, the bigger every piece is. If, for example, Alibaba is able to greatly increase its profits or a new business model, the size of the company's pie will also increase, and as a result, so will the value of its shares. This is, of course, great for the shareholders. A share which perhaps used to be worth $30 could now be worth a whole $60. When it's sold, this represents a profit of $30 per share. But what does Alibaba gain from this? The company can raise funds by selling the shares and invest or expand its business. Alibaba, for example, is valued at $467 billion from its listing on the stock exchange, versus $25 billion when it started back in 2014. The trading of shares, though, is frequently a game of chance. No one can say which company will perform well and which will not. If a company has a good reputation, investors will back it. A company with a poor reputation or poor performance will have difficulty selling its shares. Unlike a global market in which goods can be touched and taken home, on the stock exchange, what you own is the value of the shares that you purchase. You're able to monitor the value of your shares by logging onto stock exchange websites. Such share prices can rise or fall within seconds. Shareholders, therefore, have to act quickly in order not to miss an opportunity. Even a simple rumor can result in the demand for share falling first, regardless of the real value of the company. Of course, the opposite is also possible. If a particularly large number of people buy weak shares because they see, for example, great potential behind an idea, their value will rise as a result. In particular, young companies can benefit from this. Even though the sales might be falling, they can generate cash by placing their shares on the stock exchange. In the best-case scenario, this will result in their idea or their business plan being turned into reality. The value of United States publicly traded companies are listed in New York Stock Exchange, NASDAQ, and OTC markets. New York Stock Exchange, NASDAQ, and OTC markets show indexes as to how well or poorly these major companies are performing at the present time. These results also reflect how the economy is doing as a whole. Stock exchanges in other countries also have their own indexes, and all of these markets together create a globally networked marketplace. Timing and opportunity are critical in any business decision, especially in positioning yourself in a publicly traded company. As a forward-thinking investor, you have an opportunity to look at Future Science Holdings, take a slice of the pie, and be a part of the capital markets. Imagine the possibilities.